honest with me for a second. Um, when you hear the phrase business ethics, does a tiny, maybe cynical part of your brain immediately think, now there's an oxymoron?
Right, like jumbo shrimp.
Exactly, jumbo shrimp. And if it does, you are definitely not alone. I mean, we are just constantly bombarded with these stories of corporate greed.
Corners being cut.
Yeah, corners being cut to maximize shareholder value, and everyday consumers just being taken advantage of. So today, we're embarking on a deep dive that tackles this exact tension head on.
We really are.
We're exploring, a really fascinating piece of source material. It's a 2002 article by Rabbi David Galinkin, and it's titled The Basic Principles of Jewish Business Ethics.
And the timing of when this article was published is absolutely crucial for you to understand the context here.
Yeah, 2002.
Right, Rabbi Galinkin wrote this in 2002. And if you cast your mind back to that era, the author explicitly refers to the previous 12 months as the year of the corporate scandal in the United States.
Oh, man, yeah.
We are talking about the massive, just catastrophic implosions of companies like Enron, Arthur Andersen, WorldCom.
Adelphia, right?
Adelphia, exactly. These were highly publicized situations where top executives basically walked away with millions while their workers and investors were left utterly penniless and unemployed.
The landscape of commerce just felt incredibly broken at that time. And the author even notes the political climate of that specific moment, which is interesting.
Oh, absolutely.
The source text points out that President Bush had undertaken a campaign to clean up corporate fraud, but both he and Vice President Cheney were facing accusations regarding some of those very practices from when they were part of big business.
Which is a heavy historical detail to include.
It is. And actually, I want to pause right here and state very clearly to you, our listener, we are strictly reporting the historical context provided by the author in this source document.
Right, just laying out the facts of the text.
Exactly. We are absolutely not taking any political stance or endorsing these claims one way or the other. We are simply setting the historical stage exactly as the text presents it.
Precisely. Because the author uses that modern landscape of corporate failure to pivot to something incredibly ancient.
Which brings us to the mission of this deep dive.
Right, we're looking at how ancient Jewish law approaches the business world. And what we're going to find is that the sages didn't just offer these vague, feel-good platitudes about being a nice person.
No, they did not.
They developed strict, concrete, daily rules that you can actually apply to your modern professional life, basically to avoid the exact pitfalls of greed that brought down those massive modern corporations.
And I think it's strangely comforting to know that this widespread cynicism about business isn't a new phenomenon at all.
Oh, it's ancient.
The text points out that people have been side-eyeing merchants for thousands of years. There is a quote from Ben Sira from 2,200 years ago.
A classic.
Yeah. He says, "A merchant can hardly keep himself from wrongdoing, and a storekeeper will not be acquitted of sin."
That is pretty blunt.
Right. And then the author brings in the famous Yiddish author Y.L. Peretz from a completely different era, who bluntly said, "The bigger the merchant, the smaller the Jew."
Wow. It perfectly captures that universal historical suspicion that accumulating wealth inevitably requires compromising your morals.
Yes.
But the Jewish sages took a profoundly different approach to this problem. They recognized the inherent temptation in business, but rather than just throwing up their hands or writing a gevik, which means non-legal or narrative statements about some impossible utopian society, they got to work.
They got highly practical.
They did. They insisted on spelling out concrete legal frameworks to govern the messiness of everyday commerce.
And in doing so, they elevated the importance of business to the absolute highest spiritual level. There is a quote in our source material that actually stopped me in my tracks.
Which one?
"Character is tested through business."
That is powerful.
It really is. In fact, the text notes that, according to the Talmud, when a person dies and is brought in for their final heavenly judgment, the ultimate question they are asked isn't just about how often they prayed or went to a house of worship.
No, the very first question is different.
The very first question is, were you faithful in your business dealings?
Think about the weight of that.
Right. The ultimate test of your faith is how you treat your customers and your competitors. Okay, let's unpack this, because the author outlines several specific legal principles to help us pass that test. Where do we even begin?
Well, we begin in the physical realm of the marketplace. The foundational rule is the law of accurate weights and measures.
Okay.
The biblical injunction from the book of Leviticus is incredibly direct. It says, "You shall not falsify measures of length, weight, or capacity. You shall have an honest balance, an honest weight.
Because in the ancient world, if your scale was tipped, you were quite literally stealing from the customer right in front of their eyes.
Exactly.
But they didn't just leave it as a moral suggestion to, just be honest. The text talks about the Mishnah detailing exact cleaning schedules to prevent accidental theft through grime buildup.
The details are intense.
They are. Wholesalers had to clean their measures every 30 days. Retailers had to clean their measures twice a week, polish their weights once a week, and clean up the scale before every single weighing.
Before every single weighing.
Think about how intensely practical and, frankly, how exhausting that level of commitment is.
It is a massive commitment.
Mm-hmm.
And throughout the Talmudic period, the rabbis actually appointed officials called agronomoi.
Which is Greek, right?
Yes, it's a Greek word for market commissioners. Their entire job was to walk through the markets, inspect the measures and weights, and fix prices for basic commodities.
Wow.
Even as late as the 19th century, Rabbi Israel Salanter argued that just as a rabbi must rigorously inspect the knives of the ritual slaughterers to ensure they meet religious standards, he must go from store to store to inspect the weights and measures of the local storekeepers.
So, if you run a business today, this isn't just ancient agricultural history. According to this framework, you have an ethical obligation to constantly check and recalibrate your retail scales, your digital checkout systems, your cash registers.
Absolutely.
Not just because civil law demands it or because a government inspector might show up with a fine, but because human ethics demand it.
Which naturally brings up the question of profit. I mean, how much are you actually allowed to make?
Right, the bottom line.
This is governed by the concept of onat mammon, which translates to monetary deception.
Okay.
The biblical verse commands that when you buy or sell to your neighbor, you shall not deceive one another. Again, the rabbis of the Talmud didn't leave deceit as a vague, subjective concept.
They rarely do.
True. They turned this into a rigid mathematical formula regarding price gouging.
Right, the rabbis actually broke the math down into 3 distinct categories based on a fraction of 1/6.
1/6, yes.
So, if a seller overcharges by more than 1/6 above the accepted market price, the sale is entirely null and void, and the seller has to return the buyer's money.
It's just voided.
Voided. If the price charged was exactly 1/6 more, the transaction itself is valid, but the seller must return the excess amount overcharged.
Oh.
And if the overcharge was less than 1/6, the transaction is valid and no money needs to be returned. But wait, a strict 1/6 rule?
It sounds restrictive.
It does. How does a fixed fraction like that hold up when market values fluctuate daily? That seems incredibly rigid for a functioning economy.
What's fascinating here is how this structure perfectly balances the volatile realities of commerce with the strict protection of the consumer.
Okay, how so?
It acknowledges that price fluctuations happen and that it is entirely permissible and necessary for a business person to make a fair profit.
Right, you have to stay in business.
Yeah. Exactly. A little bit of margin variation, anything under 1/6, is acceptable market friction. But it draws a hard mathematical line in the sand. It is not permissible to price gouge and rob the customer blind.
It takes the subjectivity completely out of the equation.
Totally out. You can't say, well, the market bears what it bears. The law says, no, the market bears up to 1/6.
But physical price tags are just one part of commerce. Here's where it gets really interesting,
Yeah.
because the law moves into the psychology of deception.
The mental game.
Yes. The next major concept is called ana at devarim, or verbal deception.
Right.
The rabbis noted that the biblical text explicitly mentions monetary deception in one verse, and then in another verse says, do not deceive one another, but fear your God.
So they looked at that repetition.
Exactly. They concluded this second verse must refer to deceiving with your words.
And the primary example they pull from the Mishnah is brilliant in its understanding of human nature. It states that a person should not say to a merchant, how much does this cost? If they have absolutely no intention of buying it.
Just asking for the price.
Right. Why? Because asking out of idle curiosity gives the merchant false hope.
Oh man, let's be real. We have probably all been guilty of this while window shopping.
Definitely.
But the author gives a highly relatable modern example. Let's say you, the listener, are like the character Reuven in our text.
Okay, Reuven.
Reuven wants to buy a computer. He goes to a discount warehouse outlet to buy it because it's cheap, but he really wants a demonstration first to see how it works.
Makes sense.
But the warehouse outlet, because it's a bare-bones discount place, isn't equipped for demonstrations.
So this savvy warehouse salesman tells Reuven, go down the block to the IBM showroom, ask them for a demonstration, and then come right back here to buy the computer at our low, low price.
And Reuven does exactly that. He gets a free half-hour demonstration from the IBM team, politely leaves, and goes to get his discount at the warehouse.
He feels pretty smart.
He does. Reuven might think he's just being the ultimate savvy shopper. But according to this principle, he has committed verbal deception. He goes into the IBM store asking for a demonstration with absolutely zero intention of purchasing the computer there.
Exactly. The text points out that the IBM salesman is being emotionally and temporally robbed.
Temporally robbed.
Yes, his time is stolen. He either loses out on a real, paying customer while he's busy with Reuven, or he just feels terrible and deflated when Reuven walks out on him after 30 minutes of hard, earnest work.
So if we step back, the core takeaway here isn't just about consumer protection. It's that the ancient sages viewed a business transaction as a deeply emotional and psychological exchange long before modern behavioral economics even existed.
They saw the human element.
You are dealing with a human being whose time and hopes have inherent value.
And this psychological protection extends to how the products themselves are presented.
Right.
This is the concept of nivat.at, which literally translates to stealing a person's mind.
Stealing a mind, that sounds intense.
It does. Today, we would probably call it false packaging or false labeling.
The examples the Talmud gives for this are incredibly vivid. You cannot sell a sandal made from the leather of an animal that died of a disease and pass it off as leather from an animal that was properly slaughtered.
Right.
You cannot sift only the beans at the very top of the bushel because that deceives the buyer's eye into thinking the entire bushel has been perfectly sifted.
It creates an illusion.
And you are strictly forbidden from painting animals or utensils to improve their appearance just to cover up their underlying defects.
The modern equivalents are everywhere. The author mentions taking an inferior brand of shirt and slapping a Pierre Cardin label on it.
Oh, yeah.
Or to think about buying a box of perfect-looking tomatoes or strawberries, only to get home, open the box, and discover that they were deliberately packaged with all the rotten spots facing down.
The absolute worst. Or the classic example, touching up and polishing a used car solely to hide massive mechanical defects and overcharge the customer. It is all stealing the mind of the consumer. You are creating a false reality for them to make a decision in.
And that idea of creating a false reality brings up an even deeper vulnerability. What happens when the buyer fundamentally lacks the knowledge to even know they are being tricked?
Right.
This is addressed in the principle of putting a stumbling block before the blind.
Yes, from Leviticus chapter 19. And it's vital to understand that the sages interpreted blind in a very broad metaphorical fashion. It doesn't just mean physical blindness, it means informational blindness.
It applies perfectly to when you are giving advice to someone who is blind in a particular subject matter. The ancient example the text uses is telling your neighbor, sell your field and buy a donkey, when your secret internal purpose is to deceive them so you can buy their field for yourself.
And you can't just hide behind a technicality saying, but I gave him good advice, donkeys are great.
Right, donkeys are very useful.
The text specifically notes that because this deceit is hidden in the heart, the verse ends with the warning, but you shall fear your God.
God knows your true intentions.
Exactly. And for you listening today, this law of the informational stumbling block is incredibly relevant if you act as a fiduciary.
Oh, heavily relevant.
A real estate agent should not dupe a young couple into buying a home with structural faults just to make a fast buck. A stockbroker should not sell his client a bad investment simply to collect the commission.
You are actively exploiting their lack of knowledge. You are placing a stumbling block of bad advice in front of their informational blindness.
Yeah.
And speaking of our broader duties to society, we must look at how this applies to the government. This brings us to the principle of Dina di Malkuta Dina, which translates to the law of the land is the law.
Okay.
This was established 1,800 years ago by the prominent sage Amora Shmuel, and it is incredibly direct when it comes to one of our least favorite topics.
Let me guess. Taxes.
Taxes.
Nobody likes paying taxes. But Jewish business law has a very clear, uncompromising opinion on tax evasion. The Talmud specifically includes secular taxation as a law that must be followed.
No loopholes.
No loopholes. The text cites Maimonides, the great medieval philosopher and scholar who summarizes this beautifully. He says that a tax fixed by the king of 33% or 25% or any fixed sum must be paid.
It must be paid.
If a person avoids paying such a tax, they are a transgressor. Why? Because they are literally stealing the king's portion. And that applies regardless of whether the king is Jewish or not.
It fundamentally rejects the idea that you can be highly ethical in your interpersonal business dealings, but somehow justify cheating the government on your tax returns.
You can't separate the two.
The ethics apply universally. But this brings us to a fascinating shift in our source material. Up to this point, we've discussed strict legal baselines: don't cheat, don't lie, pay your taxes.
The baseline rules.
Right. But the final section deals with ethical principles that go one step beyond what we would normally expect a business person to do.
This is the concept of lifnim mishrat hadin, which means going beyond the letter of the law. And the text shares one of the most incredible stories I have ever read to illustrate this.
The Rav Safra story.
Yes, the story of Rav Safra from the Talmud. Rav Safra had some wine for sale. A potential buyer came to him right at the exact moment Rav Safra was reciting the Shema, which is a core mandatory daily prayer.
Right, and because he was deep in the middle of this prayer, Rav Safra could not interrupt his recitation to speak.
He's totally silent. So the customer says, "Sell me this wine for such and such a price." Rav Safra doesn't answer.
He can't.
Right. The customer assumes the silence means Rav Safra is holding out for a better deal. So the customer adds to his own original offer and says, "Okay, sell me this wine for such and such a higher price."
Still no answer.
Still, Rav Safra does not answer. This cycle repeats, with the customer actively bidding against himself with ever-escalating prices.
Which is a salesman's dream.
A total dream. And then Rav Safra finally finishes the Shema. He turns to the customer and says, "From the time you made your first offer, I had resolved in my mind to sell it to you. Therefore, I may take no greater amount than your first bid."
It's an astonishing level of integrity. An early code of Jewish law called the Shiltot actually tried to make this behavior a mandatory norm.
Really?
Yes, ruling that if a person merely resolved in his mind to sell something at a particular price, he shouldn't go back on that internal resolution. Now, later codes didn't include this as strict law, but the concept of going beyond the letter of the law remained a massive guiding ideal.
Which is amazing.
And the text proves this by jumping forward 1,600 years to a German Jew in 1870.
Ah, yes. The firm of Beer, Sondheimer and Company. The story goes that on a Friday in 1870, right before the Franco-German War broke out, Mr. Beer left his office for the Sabbath rest.
As usual.
Right. He had large holdings in copper and other metals that were suddenly desperately necessary for waging war. On Sunday morning, his porter presented him with a massive stack of telegrams that had arrived from the War Ministry.
They were trying to buy all the metals he possessed.
Yeah.
And just like the buyer with Rav Safra, each successive telegram increased the price.
Bidding against themselves.
Exactly. When Mr. Beer finally read through them on Sunday, he informed the War Department that he would have accepted their very first lowest offer.
Wow.
He explained he only failed to answer because it was the Sabbath, and therefore he was prepared to let the government have all his merchandise at that original lowest rate.
Think about the sheer scale of that temptation. A modern CEO with a monopoly on wartime copper would absolutely maximize profit.
No question.
But Mr. Beer went beyond the letter of the law. And the result? The War Ministry was so utterly impressed by this example of living Judaism that they made the firm their main global supplier, establishing the company's tremendous expansion and global significance.
Going beyond the letter of the law also includes a vital sub-principle being above suspicion, or v'item nakim.
Above suspicion?
You must be guiltless before the Lord and before Israel. People need to see that you are acting ethically. The text notes that in Talmudic times, charity collectors who collected copper coins were not permitted to exchange those coins for their own silver coins.
Even if the exchange rate was perfectly fair.
Exactly. Why? Because to an outside observer, it might look like they were quietly pocketing charity money. They were only allowed to exchange coins with outsiders.
Just to be safe.
Similarly, overseers of soup kitchens who accumulated surplus food couldn't buy it themselves. They had to sell it to others to avoid the mere impression of impropriety.
And the author applies this directly to the modern corporate world, which I love.
It's so relevant.
This is exactly why a manager or a treasurer must frequently submit proper documentation and business expense receipts. It's not just bureaucratic red tape. The principle of being above suspicion requires you to submit receipts to actively avoid even the suspicion of embezzlement.
You must proactively protect your own reputation.
Which brings us to the final concept, which is really the ultimate reputation. It is the framework of Kiddush Hashem, the sanctification of God's name, versus Hilul Hashem, the desecration of God's name.
The highest stakes.
When we do business, we aren't just representing our own bank accounts. We are representing our communities, our families, and our faiths.
The author puts it in very stark terms. When a Jew cheats on his taxes, The tax official doesn't just say Max Goldberg is a cheat. The official says Jews are thieves. What an unethical religion.
It reflects on everyone.
It does. When a Jewish retailer overcharges, the customer doesn't just say Joe Schwartz the thief. They say Jews are thieves. What an unjust God. A midrash, which is a classical rabbinic interpretation, points out that if a man studies Torah but is not loving in his business dealings, people will say, woe to so-and-so who has studied Torah.
Yeah,
The name of heaven is literally desecrated through his bad business.
it's a heavy burden.
It is. But if we connect this to the bigger picture, the positive inverse is incredibly powerful. When you are scrupulously honest, it reflects brilliantly on your entire people.
The text ends with the classic story of Shimon ben Shita, who is in the flax trade. His students wanted him to retire, so they bought a donkey for him from a non-Jewish trader to ease his workload.
A nice gesture.
Very nice. But as it turned out, there was a precious gem hanging from the donkey's neck.
The students were absolutely thrilled. They told him, from now on, you don't have to work anymore.
Right, but Shimon ben Shita asked, and did its master know?
They replied, no.
And he immediately commanded them, go and return it. Do you think I am a barbarian?
Do you think I am a barbarian? It's such an incredible response.
It really is. And when the trader got the gem back, what did he say? He didn't just thank Shimon, he said, blessed be the God of the Jews.
That is Kiddush Hashem.
That is the sanctification of God's name through a simple, honest business transaction. So, what does this all mean? The author leaves us with a stark choice. When you go to work tomorrow, when you price your items, when you advise your clients, you have a decision to make.
A daily decision.
You can choose to emulate the CEOs of Enron and Anderson, chasing every last dollar regardless of the human cost, or you can choose to emulate Rab Safra of Babylon and Shimon ben Shita of Jerusalem.
And this raises an important question for you to ponder long after we finish today. The text insists that character is tested through business. But how does that work in our rapidly changing modern world?
It's changing fast.
We are moving toward a reality of anonymous, algorithmic online trading and AI-driven sales with absolutely zero face-to-face human interaction. When you never look your customer in the eye, do these ancient rules of empathy, of protecting the blind, of not stealing a person's mind become harder to follow?
That is the real challenge.
Or, because the systems are so cold and automated, are these intensely human principles actually more desperately important than ever before?
That is a brilliant thought to leave on. The tools of business may evolve, but the human character being tested remains exactly the same. Thank you so much for joining us for this deep dive into the basic principles of Jewish business ethics. We hope it gives you some concrete tools and some ancient wisdom to navigate your own professional world. Until next time, keep learning and keep asking the big questions.